Hi, I'm Navin Ranavar. My subject is corporate accounting with unit code S15020. My student ID is EMB22899. Now I'm going to give presentation on annual report of Northern Star Resources Limited, which is one of the listed company of Australian Stock Exchange ASX. Now let's begin with a brief introduction of the company. Northern Star Resources Limited is a global global scale Australian gold producer with Tier 1 world-class project located in highly prospective and low sovereign risk region of Australia and the North America. And this report discussed the reason for differences in statutory and effective tax rate, and it also discussed about the deferred tax rate, deferred tax assets and liabilities. And there are temporary and permanent differences in income tax payable, and also the income tax paid and the income tax expenses. So there are different accounting concepts which I'm going to discuss now. Some of them are accounting profit, taxable profit, temporary difference, taxable temporary difference, deductive temporary difference, deferred tax assets and deferred tax liabilities. So let's start with the accounting profit. The accounting profit from regular business operation calculated and reported in accordance with the accounting standards and principles prevailing. Accounting profit can also be described as profit before tax, which doesn't include provision for income tax expenses. Northern Star Resources Limited had pre-tax nomination. So now let's move to another topic, is taxable profit. Taxable profit is the portion of the company's accounting profit that is subject to the income tax in accordance with the prevailing laws in the company's jurisdiction. So next, another topic is temporary difference. The concept of any deferred tax assets or liabilities is based on temporary differences. Temporary differences arises due to the difference in the tax paid and carrying amount of assets and liabilities. For example, Northern Star Resources Limited has temporary difference due to revaluation amounting to 30,570,000 in 2019. So let's move to another topic, taxable temporary difference. Taxable temporary difference is the temporary difference. Temporary difference are difference between the tax basis and carrying amount of assets and liabilities that result in taxable amounts in the future periods. That while deducting the taxable income as balance sheet items are settled. So let's move to another topic, is deductible temporary difference. Deductible temporary difference are difference between the tax and deductible amounts in future periods while determining taxable income as balance sheet items are settled or recovered. And let's move to another topic, deferred tax assets. Deferred tax assets arises when taxable income of a company is higher than the accounting profit reported in company's income statement. So now the last topic is deferred tax liabilities. Deferred tax liability arises when accounting profit is higher than the taxable income of a company and leading to higher income tax expenses compared to income tax payable, which leads to deficit tax payment, which is expected to be limited in the future periods. So let's move to another slide. It's like recognition criteria is based on two different topics. One is different tax assets and another is different tax liabilities. So let's discuss with the deferred tax assets. Deferred tax assets recognized for all the deductible temporary differences, and deferred tax asset does not recognize it if it arises from initial recognition of assets and liabilities, initial recognition of the transaction. So let's move to and the deferred tax liabilities. Deferred tax liabilities is recognized if taxable temporary difference and differences expected to be eliminated. And the deferred tax liability is not recognized if it arises from initial recognition of goodwill, assessed liabilities not related to business and transaction that do not affect the taxable income. So next, move to the next slide. The Northern Star Limited for tax expense in the latest financial statement shows that income tax expenses reported in income statement identified as a taxable income, whereas it also based on the latest financial statement financial statement income tax expenses for the year 30 June 2019 was 60,073,000. So now let's move to another topic. From the Northern Star Limited has identify of deferred tax assets and liabilities which are reported in the balance sheet and reason behind recording. The first one is, it was reported that when there is differences between tax basis and carrying amount of assets and the liabilities, Northern Star Resources Limited deferred tax liability amounting to $65,569,000 reported as non-current liabilities, and deferred tax liabilities arises when accounting income is lower than the taxable income, leading to additional tax payable in future expense. Another one is net deferred. The company Northern Star Resources Limited net deferred tax liability reported 65,569,000 in 2019 and 57,134,000 in 2018. And also there is deferred tax liability has been recorded in the company's annual report. So next, move to the another topic, income tax assessed of the company and the reason for differences in tax expenses and tax payable. So I just figured out some important points. Some of them are: current tax liabilities are income tax payable based on current tax payable and current tax assessed and tax refund receivable for previous paid taxes. In 2018, income tax payable amounting to 14,959,000 and income tax expenses amounting to 83,659,000. Another one is there are various reasons behind the difference between income tax payable and income tax expenses. So next, move to the next slide. Which is that the differences between the tax expenses and tax paid in income statement and cash flow statement of the company. The first one is income tax expenses reported in profit and loss statement, and income tax actual income tax paid in cash are reported in the cash flow statement. And Northern Star Limited in 2019, Northern Star Limited income tax expenses was 60,073,000 and income tax paid was 90,350,000. And there are some differences between income tax expenses and actual income tax paid due to the payment and made in the prior period of refund or received in the current period. So next, move to another topic, temporary and permanent difference of the company. Temporary difference arises from differences in the tax based on liabilities of a company and creation of deferred tax liabilities. Permanent differences are differences between tax and financial reporting of revenues and expenses. So now let's move to another topic, treatment of the tax from company and inside gain from the company's tax account. So there are application of tax treatment of Northern Star Limited, fascinating and challenging at the same time. Tax treatment in account for Northern Star Limited amounts directly recognized in the equity rather than through income tax expenses. So now next, move to the another topic, move the conclusion. So application of various tax laws and regulations crucial for a company. Proper knowledge of income tax is crucial as companies can optimize their tax burden. So now I would like to end my presentation. Thank you.